Asian stocks ended mostly lower overnight. Paul Gordon has been tracking the markets, and he joins us with details from Hong Kong. Paul, talk to us. So we'll wait on the markets.
Very good day to you, Chris. Yeah, well, the main concern right now seems to be share sales diluting existing shareholdings. Now, people with knowledge of the matter say Japan's second biggest lender, Mizuho Financial, will start selling $6.3 billion worth of shares this week to boost its capital. Mizuho shares closed more than 3% lower on that news. Meanwhile, Japan's second biggest brokerage, Daiwa Securities, said it'll raise about $2.5 billion. It said that on Friday after the markets closed, also in a share sale. Today, the stock slumped as much as 15%, the most in 9 years. It closed down 12%. Another factor possibly weighing on stocks is eco data. Japanese factory output came out for May. It was lower than economists had forecast, though it did increase for a third month as companies rebuild their inventories. Production climbed just under 6% from the prior month. Economists were looking for more like 7%. Output, though, worth noting, down almost 30% from 1 year earlier. On top of that, retail sales weaker than expected. Chris?
Hey, Paul, I was looking at the Bloomberg terminal this morning. I saw Deutsche Bank issued a warning on China. What exactly did it have to say? Did you read that report?
I had a look at the story. I didn't get a chance to look at the full report, but basically Deutsche Bank says China is close to its spending limit, and that may lead to slower growth next year. Now, Deutsche's senior economist Ma Jun says those expecting a big stimulus next year and therefore stronger growth will be, in his word, disappointed. He says growth will drop to 7.2% next year from 7.5% this year. So, Chris, whichever way you cut it, that's not a bad number, but if it's not up to expectations, that could hurt investors. Over to you.
Always those expectations that hurt us. Thank you so much, Paul. Paul Gordon in Hong Kong.